Hey there, this is Bill with smarttrades.com. Today is Friday, May 11th. It's about 11:30 a.m. Pacific time. As always, if you'd like more frequent updates, please visit me at smarttrades.com. Um, and let's start off here with the S&P. As you may remember, I said that if we didn't exceed 1422 in the last report, that I thought we were going to go down again. And indeed, the pattern is pretty clear. What I think is probably an A down, A, B, C, B back up, and then C down to a possible low here. I think that we're near a bottom as long as we can hold the 1340 level in the S&P. And if that is the case, it sets up a nice 1 equals 5 up around 1448, a number that I've mentioned in the past several times. That said, this market certainly isn't out of the woods yet, and I'll get into the alternate count here in the next slide. But next support comes in around 1310 if we fail at 1340, and then around the 1285 area or so. Here indeed is that more bearish count, certainly still viable. And resistance comes in at that old target around the 1375, 1378 area. If we were to have a corrective rally that failed into that area, that would concern me. And indeed, this would be the count, possibly 1, 2, 1, and then 2 back up to around, again, 1375. You'll remember that was a target for some time and indeed did produce a short-term peak back in March. Here's a little bit more detail. Very nice internal patterns here. 5-wave structure up of in our ABC up to 1415 or so in the S&P, and from there pretty clear impulsive decline that's consistent with the C wave, but also can be counted as another wave 1 down. So far, though, we have held our A equals C area pretty well. And we also have a nice 1 equals 5 type pattern. But the problem here is that the pattern off of the low is corrective so far. And here's a little bit more of a pulled back view. And again, you can see that corrective rally that's still working itself out. Possibly yet another wave 4 would allow us to go down and test the 1340 area again. Here's the Dow. Basically the same pattern. This is a weekly chart, obviously. Long-term resistance in the Dow came in around that 12,900 area or just below there. And indeed, that's the area that we're holding right now so far. And I think this count also fits pretty well. But again, we have to hold the general area of the recent lows in the Dow. That comes in around 12,700. And if we do hold, this gives us a nice flat wave 4 and a target up around the 13,600, 13,700 plus area in the Dow. Here's the shorter term pattern on the Dow. Again, that nice impulsive pattern for C, possibly complete, but again, the corrective rally off the low probably best counts as a 4. That allows us to go back down and test 12,700 again. And here indeed is again that more bearish count. Pardon the inconsistency with the 0.1, 0.2 and so on and so forth labeling from the other charts. But at any rate, again, we can count this as a 5-wave structure complete down here to about the 12,750 level, and a corrective rally coming back up. Now, if we were to falter here around the 13,100 level, there's a pretty good chance that that this is not a 4 but a wave 2, and that has bearish implications, obviously. But let's let it play out here. Here's a little bit more of a pulled back view, and again, here's that A equals C target basis the Dow. So far, so good. It's holding a clean A down in an ABC pattern, a clean ABC B up, and this is one of the reasons that I favor that this pattern is corrective. The new high in the Dow was an ABC pattern, not a terminal impulse pattern to a new high, and so that's more consistent with a B wave peak. The impulse down obviously is consistent with a C wave, and the 12,700 level is a previous 4th wave support. it's just beyond an A equals C, and so on and so forth. So if we can hold there and get an impulsive rally off of that low, I think that favors that we're going to see new highs. But we need that impulsive rally to confirm the low, and so far we haven't gotten it. You'll remember in a previous report I mentioned the 129 level for the euro, and this chart actually is from yesterday in my report, and you'll see here a clean A down. We have an A, B, C of B, 5 waves A equals C down to this lower channel and also to that 129 support. So a pretty nice corrective looking decline in the euro, which is consistent also with a potential bounce if, again, it holds. So far we haven't gotten that impulsive confirming rally. This chart also from yesterday, gold. I think gold's getting to a place that's interesting to watch. Clearly the decline over the last several weeks in gold is corrective. Whether or not it's bottomed yet, I don't know, but it's time to start watching gold, I believe, here. We just are hitting this lower channel. We are bouncing from there. So I think gold is worth another look. Natural gas, I've been watching this for some time, looking for a bottom, and I think that indeed we do have a probable bottom. We had a 1425 to 1430 target in UNG, United States Natural Gas Fund, and from there I think this best counts as an impulsive rally. We're getting into resistance in a possible place where we've got a completed impulse up, but I'm looking for a corrective decline as a possible buy in natural gas. JP Morgan. In my report a few weeks ago that I sent out to my clients, I noted that we had broken the trend line. This is one of the reasons that I was bearish. The S&P up at the 1415 level, in addition to other bank stocks like Bank of America, which also has been quite weak. But you'll notice after we broke that trend line, we have a very clear ABC rally, which failed just below the lower channel. Here's a bit more of a close-up of that. And you know, everybody talks about how corrupt the markets are and manipulated and so on and so forth, and no doubt about it. I mean, the idea that JP Morgan didn't know they had a $2 billion loss in the works is ridiculous. You know, I mean, if I've got customers who I trade for who use TradeStation, they can see every tick of profit or loss in real time. The idea that the CEO of JP Morgan wasn't aware of a $2 billion drawdown on a trade, or the managers at JP Morgan, is just absurd. So, you know, they knew about it. There were folks on the inside that knew about it, you know, before the public announcement. And I think that the pattern actually reflects that. You've got a nice, clean, classic ABC. A lot of folks out there will tell you classic, simple Elliott wave does not work anymore, and I think that's just ridiculous. The patterns, you see these patterns repeat all the time, and in this case you've got a retest of what was support, an ABC up that fails just below there. Here's a bit more of a close-up. Here again there's the B, there's the C wave, and then even on a smaller scale we have a little corrective pattern, probably a double zigzag, and that little trend line was broken just above the 43 level. Nice low risk shorting opportunity there. You could have put your stop above the high around the 4340, 4350 area, and been short just above 43. And this is purely technical. Obviously, I have no inside information whatsoever about JP Morgan's internal situation in their trading, but the pattern did reflect a weakness prior to the public announcement. Bank of America, this is something that I watch actively. This is a chart actually from early this morning. Here's a possible count for Bank of America. Again, we have that corrective rally that has failed. Actually, Bank of America holding up a little bit better than JP Morgan here currently. And A down, B back up, and A equals C comes in around the 760 area, which was also a previous support level. And you can now count a possible 5-wave structure to the downside. Here's an update of that chart, and in fact we have a very small impulse off of that low, and we've gotten back above the 760 area. which is important. The next stage is to get back above the 8 level in Bank of America to confirm a possible short-term low here. This pattern can also be counted as impulsive to the downside, so I would be concerned if the rally off of this low turns out to be corrective. Bonds, a bit of a stretch this count. We've got an A down, perhaps a very elongated B wave. I think you could also count this as an A, B, C, and this is a 5-wave structure, fifth wave. But you can see here we do have what looks like a 5-wave structure possibly heading for termination. Again, it can count as A, B, C, of B up. The implication of that is that we're going to drop back down to the 133, 134 level in a C wave within this very large channel. And finally, Lockheed Martin. Some of you may remember this was a stock that I had recommended some time ago, back here around the 76, 77 area. Kind of hard to get yield these days. Lockheed Martin yielding about 5% at the time when it was in that 76, 77 area. In addition to that, a nice 15 or so point rally. And as I noted for my clients here, from there, as we tested this 92 area, very bearish looking wedge and a possible peak and an impulsive decline, probably another sign of potential longer term weakness. It's possible this can be counted as a irregular or expanded flat. That said, if we get a corrective rally in Lockheed Martin, that's probably bearish. But again, classic ABC pattern, actually a corrective pattern just above that larger corrective ABC. Really nice setup for buys here, both the breakout of the larger ABC and then the confirming smaller ABC, and that breakout at about that same level above the B wave, and fairly low risk. You could have had your stop just below 76, been buying this around the 77 level for a move up to about 92. Anyway, once again, if you would like more frequent updates, please visit smarttrades.com. And I update on Twitter intraday. I send out 2, 3, 4, sometimes 5 reports a week, and I'd love to have you come on board. Thank you so much for watching. Have a great weekend. Bye-bye.